Hey, everybody. We are super happy to be here with you today. Just kind of walk through a really exciting tool that us at Hinge have been really devoting a lot of content as well as a lot of time and resources in developing because we believe in this product so much and the useful nature that it presents to not only your everyday owner and operator, but just kind of starting to rework and reframe the thought process of what does it look like to effectively manage childcare and preschool in today's age. Today I have with me Miss Kristine Mailer, and she'll be helping me out. And again, my name is Taylor Lepart. We're both here with Hinge, working on the financial and success services side to ultimately bring you great product and content to help you facilitate effective management of your schools and your financial success around your companies. Again, this is a framework, and we'll be talking about the tool in depth as we walk through all of the tips and tricks and features that we've implemented within this financial app. And I think without further ado, Kristine, let's just jump into it. What do you say?
Yeah, I'm super excited to be here today. Thank you.
So quickly, just for today's agenda, we're gonna walk through what is framework exactly, then some best practices, and then we'll do a live demo of sorts of how to walk through inputting your numbers, reviewing the reports and insights, and playing some really great what if games as far as giving you as much knowledge and information from your numbers as we possibly can from this app. And then wrapping up after that, we'll kind of go through some recommended best practices and how to, now that you have framework at your disposal, what does that mean for you? How can you leverage this tool to see some really great gains from a financials perspective and overall management of your schools? And then where do you go from there? What other resources can Hinge provide, and making sure that you're teed up for success and using this tool, and other ways that we can provide you with great content and resources to get you on your way. So talking about what is framework. So in a nutshell, framework is a financial app that provides benchmark analysis based on your school's size and tuition. Now you'll see as we walk through that there are some initial inputs for you to contribute information so that the model understands not only the generation of revenue from your school, but also what the capacity is and what that peak level performance should look like for your school. So it gives you optimal analysis based on those two metrics, but it also tailors the expenses to line up with those corresponding revenue and enrollment sizes, so that you're not comparing apples to oranges. You're looking at realistic numbers based on your tuition size and overall capacity. Now, within this, our ultimate aim is to provide you a tool that gives you substantial knowledge that you necessarily wouldn't have anywhere else outside of a benchmark analysis. We try to give it a very easy to use user interface so you can navigate the tool with ease after you've inputted all of your numbers and compare your financial metrics, so that it ultimately can give you great insights to increase your profitability and open up new avenues of growth and opportunity within your school. And Kristine has some great insights that she'll tag into our walkthrough to give you some tips and tricks of like what, from a financial perspective, we in the industry look for and ultimately look toward, so that we can realize some financial success within your business. Walking through some best practices, we've built this tool so that it should be pretty easy, not only to implement, but also kind of take away from. So with that said, all you need to bring with you are your tuition rate sheets, your current enrollment, and your most recent profit and loss statement. Now, I say this in the beginning of all of these webinars, walking through framework, but it's very important that all of these pieces of information match each other. So we want to look at your most recent tuition rate sheet for whatever school year you're currently in, as well as the corresponding enrollment piece for the most recent 12 months. I think is a good period to bring toward, but also let's make sure that the enrollment sheet and your profit and loss match. So if it's for the most current 12-month view, so we're looking at, let's just make it easy and say a full year 2022, we want to make sure that we're inputting the numbers for the full year 2022 period, at least for the initial stage. And we've also built framework so that it auto saves as you move through the tool, inputting your numbers and making sure that you have everything dialed in. So we encourage you to take breaks. This can be a little daunting as far as the required information as you're inputting the numbers. And we broke it up so that it corresponds with our 5 key pillars, with tuition, occupancy, discounts, staff, facilities, and other operational expenses. So as you hit each milestone through the framework app, we always encourage you, take a break. If you run into any trouble, this can be a great time to pick up the phone, call Kristine, call myself, call anybody at Hinge, as we're all pretty adept at the financial app at this point, to kind of get you on your way. And we want this to be a very ease of use experience so that you understand exactly what's going into the model, so that you have a better conceptualization of what the model is telling you on the back end, so you can effectively implement it into your management strategy and your financial planning. I think moving forward, let's dive into what Framework has to offer and jump into the app itself. So there's a couple things on the landing page that I do want to point out. I mentioned in the intro to this webinar that we are pouring in a lot of content and resources into developing and making really Framework a all-encompassing one-stop shop for everything you need as far as financial analysis, but also content around how do we implement that? What does it look like from a discounting perspective? How should we really tackle some of the things that Framework is encouraging us to engage our operations with, staffing costs and facility, likewise there. So at the very, very top, we've made it very easy for you to locate webinars, articles, and then your reports and insights, which is ultimately what the model generates. But I want to highlight the webinars and the articles, as we have compiled through YouTube in this link a full playlist of all of our Framework sprints, our detailed analytic through what we see as highlights through Framework, areas of focus. These are also integrated with the reports and insights. So as you dive into these segments or the 5 key pillars that we'll touch on later, these will come into a direct link for you to view, for you to gain some insights on how to implement those strategies within your business. So I wanted to point that out on the front end, because that is a great resource that we've added to the landing page of Framework. And then the corresponding articles and blog posts go along with that as well. I think those are also linked directly to our Hinge Advisors webpage, give you some great tips and tricks as you're walking through the reports and insights as well. So with that being said, this is the landing page. This is what you'll get to at the initial stage of working through Framework. Kind of alluding to what we were saying earlier, is what would you like to, or what would be necessary to bring to the table as you're going through this information. This should be pretty basic, pretty easy for you to go through. Just location, address, city, some overall general information, just so the model understands what you are working with here. We're going to save and go next and dive into a little bit more of the technical pieces and start with tuition and occupancy. This is one of my favorite portions of this entire tool, as we've really gave a lot of thought as the model has evolved, as our clients and our users have given us a lot of feedback on how we can better tailor this model to the owner operator and larger operators and even smaller operators. What are the nuanced differences and how can we capture that within this model? And I think where it sits today, I think our team has done a really good job really evolving how this looks. So starting off the top, very basic information from our P&L, we want to make sure that we're highlighting our annual net revenue before discounting. Before discounting is very important, as we have an entire section devoted to our discounts, because we believe that could be a very silent killer of your profitability if we bake it in with the rest of our tuition. So we want to make sure that we treat it with the respect it deserves and make sure we're really looking at that with a fine tooth comb. But looking back at our tuition occupancy, we want to highlight our net revenue, like I said, and then our tuition by billing period, and then the number of billing periods associated within that year. So with this example, we have a weekly tuition billing period, and of course, within a 12-month period, there are 52 billings within that period. Some other information just so that the model can get to know your overall revenue structure and how you treated your tuition rates in the past. So we want to make sure that we're true to the competition within your area. We have a selector there for similar, a little less, a little bit higher, just to get a familiarity of where you sit in the competition. What the last increasing to your tuition rates, have looked like over the last 12 months, as well as what those increases have been. Now, jumping into what I think is the most dynamic piece of this tool is understanding where your tuition rates hit and corresponding with your overall revenue. So we've broken this down to show classroom by classroom, segment by segment, full-time, part-time, all of the above. We have allowed full flexibility within the tool at this stage. So you'll see we have here, this would incorporate our infant classroom and then allow us to include our full capacity. What is the classroom capacity for that classroom? And then the additional segments that we allow within that classroom. Are we just looking at full-time? Do we have part-time? Or is that split up into different categories as well? 1 day, 2 day, 3 day, and then half days as well. So we really gave you a full gamut of options as far as segmenting out your classrooms and the tuition options that you provide your parents. And we allow that to correspond to show more than just part-time, full-time. If my computer will cooperate with me.
Taylor, can I add something in there on the net revenue? I wanted to
absolutely
emphasize what you're saying there. When you're looking at your profit and loss, your top line revenue, you're going to add back your discounts, but you do not want to include any one-off grants in there, meaning the grants that aren't ongoing reimbursement or monthly revenue stream. So those are your real revenue streams that you include in that revenue.
That's a great call out. And that's one of the other aspects that we've recently implemented, just because those grant monies have taken up a considerable amount or a portion of our overall revenue. To Kristine's point, we want to strip that out of our net revenue, but we've incorporated in the back half of our inputting phase within this model a dedicated section to input that revenue, so that we are, recognizing all of your P&L sources from your financial statement to this model. Great call out. Thank you, Kristine, for jumping on that. On the classroom groups and tuition rates, you see that as we add a schedule or add a segment of our revenue, an additional box pops in here, and we're able to customize our classroom based off our tuition offerings and the enrolled students within each classroom. So we're able to add and subtract as needed. And just for example purposes, let's go ahead and add another after-school classroom so I can walk you through exactly what it looks like to add all of those here. Let's just say we have a classroom of 30. We provide a part-time as well. And we'll say we have full-time of 150, part-time of 110. We have 20 kids and full-time, 5 and part-time. And that's it. That's all we need for the model to recognize the revenue and enrollment corresponding for our school and classrooms, all encompassing. I forgot to mention this earlier, but as we walk through these different segments, I encourage everybody, if you have any questions as we hit any area walking through framework, throw those into the chat box. Kristine and I will pick them up and catch them on the fly. And we are more than happy to walk through and address those as we go through the model. So functionality, you can really see our thought process of trying to capture all different areas of your tuition rates and how that corresponds with your revenue, as well as the enrollment. Kristine, from a look forward perspective, what are some of the other things that you would say are most commonly looked at from a tuition perspective when we're talking about go forward and overall financial success, kind of walking down that journey?
Yeah, well, first I want to point out you can name your class groups anything you want, so make it your own. And two, this is an opportunity to really focus on your structure, your fee structure or tuition, and whether it's weekly or monthly. It's the time to revisit all that, especially before a new school year. The other opportunity is to really see and hone in on this on a regular basis. So when we talk about staff costs going up, our tuition has to go up in line. But we hit a wall at some point where we're surpassing our competitors. So what we've got to do is stay focused on that enrollment, the capacity, and the ratios. And this really helps you to pay attention to that on a regular basis.
Yeah, I think that's a really good point. And overall, when we talk about maximizing the ability of your facility to generate revenue, the more segmentation that you have on your tuition rate sheets, the harder it gets to meet that actual 100% capacity from a staffing perspective, but also just from an overall expense management. So Kristine brings up great points of whenever it's laid out like this, we can start to really understand where the opportunities lie in capturing that incremental revenue. And although we have built the tool to capture exactly how your operations function today from tuition and revenue, ultimately looking down the road, we want to kind of rework and reframe and exploit the opportunities in these nuanced areas that they kind of go overlooked. And that's just how we've operated our tuition in the past, and that's how we're going to do it in the future. And you're kind of putting yourself in a box and really putting the threshold on yourself by limiting your tuition and rate in that regard.
You also need to focus on FTE because you might think you're at capacity, but when you add the part-times together, are you really at capacity? And that balancing that with licensing and so forth.
Great point. Great point. And I think simplifying that just overall makes that a much better analysis and gives you better insight. So moving forward, I don't see anything hitting the chat box, so we're going to move forward to discounting to the moment. And this is also an area that we put a lot of emphasis, especially on the initial stage, because there are a lot of things that we can look at and play with, and the discounts that can have a very significant impact almost immediately once you start to implement them into your schools. So, but as far as recognizing it from the P&L, we've built this matrix of sorts based off of the classrooms that you inputted in the previous tab, as well as the discounts that you offer. So in this example, we have a multiple child discount, a part-time, half-time staff discount as well. And to add additional discounts, we simply add a column here. So if we had an industry discount, say a business moved in recently and we want to create a partnership there and provide a 10% discount for all children affiliated, that will bring another column into that matrix so that we can fill that out appropriately, as well as the corresponding children for the classroom. So just say we have 0 infants. Oh, sorry. We have 0 infants. We have 4 toddlers, 3 2s, 3 3s, no 4s, 2 after school. And we'll fill in the rest of our discounts as well. Let's do this. Okay, and so that should account for all of the children who participate in the different areas of discounting that you provide to your families. Breaking it up in this way can be very beneficial to see the participation rate and maximizing some of the efficiency and kind of the the offering to your parents. So for example, if we saw by charting this out efficiently that not very many infants and toddlers were taking advantage of a particular discount, I would very much encourage you to eliminate that discount altogether, just because the revenue gain, the incremental revenue gain just associated with the discount, and especially if your parents aren't really taking advantage of that discount, it's just a smaller point of friction and impact to your offering. And that's a great way to kind of start the ball rolling and recognizing a lot of the areas of revenue growth. Kristine, what are some other kind of tips and tricks and what we're looking at from a discounting perspective?
Well, if I'm allowed to join Kathy Ligon on her soapbox, we're going to say get rid of all discounts except for staff. And even then, we've seen centers who have young staff members that are having 3 and 4 children, and that gets extremely costly. What I see here in this sample company is a lot of hidden profit. And so I kind of cringe at what this could equate to in terms of dollars. So we don't realize how much we're actually losing in terms of cash flow and profit when we're offering so many discounts. And yeah, there was a purpose for them in the past, but now going forward with the cost of the industry and being in business, we need to start cutting that out with all new members, new families.
No, I think you absolutely nailed it. And I think with your insight into that, charting it out and putting numerical values on every discount for every classroom, seeing it spread out in this way puts it in a different light for a lot of the operators that have been supplying these discounts because they want to care for their families, right? So ultimately, what happens is it kind of just snowballs and the discounts just hit out of sight, out of mind.
Mm.
And then one day you wake up and you're giving away, 20% of your overall top line to discounts without understanding the net impact and how that's affecting your profitability. So, but spreading it out like this, inputting the data, recognizing where your opportunities lie from a classroom perspective, I think is just one of the areas that this tool can provide some great insight information. And of course, I don't see anything hitting the chat box just yet, but if you have any questions revolving around discounting, revolving around how that affects your operations, what the standard is today, and kind of some benchmark analysis just in general that you can be doing on the back of the envelope as we're walking through this. I sure encourage everyone to jump in the chat if you do have those questions so that Kristine and I can tackle those as we move on. Jumping into staff discounts as we save and move forward. Of course, this is going to be the general layout for the rest of our expense structure as we're walking through this app. Is we're tackling the large line items at first to make sure that we're accurately representing what is shown in your P&L, and then slowly breaking those down line item by line item compared to our benchmarks that we've set forth based on your revenues, but also some different areas and different buckets that we've seen across the 20 plus years of doing financial analysis within the industry and understanding the nuances between each line item. So just a couple call outs as we're walking through staff costs. Of course, you want to hit your last 12 months or whatever current 12-month period you have available, the staff costs that are associated with that. We want to look at salaries only. One other thing that I point out when talking about staff or salary costs, excuse me, for this particular area of input is that this would be excluding if you are an owner operator, your salary. Different owners and operators, if you are the director of your school and also the owner, you can choose to manipulate and capitalize and structure your expenses in a lot of different ways. And there are a lot of different ways that it can be very beneficial to you based on your personal situation and how your finances are set up. But regardless of all that, we want to make sure that if you are taking a W-2, if you are taking a salary that is above market rate, if there was a different, a third party or a third excuse me, if there was a completely separate director coming in to operate your school, the salary that they would start at or be compensated for is needed to be reflected within this salary cost. So if that's $50,000, $60,000, we want to make sure that your, as an owner operator, your salary is taken out and that $50,000 or $60,000 is added back into this number, just so that we're reflecting an overall accurate market picture for the benchmark analysis moving forward. And then jumping down into some additional line items, we have payroll taxes, employee benefits, training, recruitment, and then miscellaneous staff cost. This miscellaneous staff cost is meant to be kind of a catch-all bucket. So if we want to look at, uniforms, any additional costs that could be used for other incentives or just employee appreciation, things like that can hit those. And a great tip that we added into walking through these expenses or these little icon bubbles that kind of give you a little bit better of an insight into what we're trying to capture within each input. So for salaries, it kind of explains exactly what we were talking about there. This assumes they're all center salaries with market rate director and no owner pay. And same thing for benefits. And I think, yes, so the miscellaneous staff costs will include gifts, uniforms, meetings, again, that catch-all bucket.
Taylor, I'd like to expand on the wages. So Laura's asking, does it include hourly? It includes all W-2 wages, which is important. Okay. The only thing you have to do is identify the owner's wages, and is that a realistic wage for the owner? So just to clarify, talk to your tax professional, but if you're an S corporation, you're going to be on a reasonable salary. And how does that compare to replacing yourself with a director? So the idea is to replace your revenue stream, right? Whether it's a draw, we wouldn't include draws in here, with a director that you would be taking over on your behalf. So the director, hourly, salaried, everything related to W-2 goes in there.
Perfect. I think that rounds off the staff costs moving through different expenses. One last thing I like to point out, or I need to point out, we highlight it right here, but I want to make sure that it's understood as we're moving through the expenses, because this can shift the insights that the model gives you on the back end. Is that if for any line item that you truly have zero costs for, we want to make sure that we input a zero, because if we leave it blank, the model will just assume the benchmark expense. So this is not a great example, but for staff training, if we didn't have $5,000 recognized on our P&L and say we had zero staff training, if we left it blank here, and the end result, what the model would show is that we have staff training cost of $4,135, not zero. So if it truly is zero, make sure you're inputting that zero. If not, let it accurately reflect the numbers that are in your P&L as well. So we're going to leave it at 5,000 here.
Taylor, I have a quick question on if we know we're going to raise our tuition, right? We know that's going to happen. Would we use that new tuition amount, our new income amount? So we're looking at 12 months, right? And then we know our staff costs are going up, and many states are being required to add benefits. Do we use that new number in this calculation?
What I've always recommended is use the historical value first. Meaning if you're looking at trailing 12 and it's September and you're using past 12 months as of September 2023, I would go off of those numbers that are reported, because we have built in a very clever reports and insights tool with the what if tool. And if you know you're going to increase your tuition by 10%, the tool allows you to show that incremental increase of 10%, and it'll show you how it flexes out with all of your expenses. It does the same thing with staff costs. So we can do that in a corresponding rate where we can increase your tuition by 10%. And let's say we need to increase your staff costs by 5, 8, 10%. the model allows you to do that, and it flushes through your current financials to show you kind of an expected range of profitability. So at this point in the stage, those are all really good questions. And I think staff costs and tuition increases are always on the mind of people inputting these numbers. And what I've always said for the initial stage of going through this model, let's focus on historical. And then that way on the what if side and going forward, as we keep revisiting the tool, we can look to forecasting and budgeting and really leveraging the power of the tool to our benefit in that regard.
Agree.
Awesome. So I think we've captured everything here. Laura, thank you for the question. If there's any other staff costs or benchmark related questions, or how we input here, or what considerations we take in looking at the benchmark analysis from a staffing perspective, please throw those in the chat. We'll pick them up and we'll catch them on the fly as we move on. So we're going to save our staff input data and move on to our facilities. So from a facilities perspective, very similar to staffing costs, our main driver of this area will, of course, be our rent. And so we see the different areas of your lease kind of broken out from base rent, CAM, and just the overall ballpark of where your facility square footage lands. We include the facility square footage for two reasons. One, it impacts the overall max capability of your revenue generation. So we look at what your enrollment is, what it looks like per square foot as far as classroom segmentation, but it also analyzes what you're paying per square foot on a rent level. And we have some ballpark metrics of what we've seen kind of nationally based off the different square footage thresholds of what that price per square foot is. And so that kind of goes into the overall reports and insights and informs the model of where the best case scenario and what a good benchmark for your particular school is. So starting off the top, we will look at base rent, and it's really important to input the base rent here. There are a lot of schools that and lease agreements out there that incorporate a lot of different structures, CAM, a lot of common area and snow removal, landscape, other items that are built into this overall number of what you're paying on a monthly basis for your lease. So let's make sure we itemize that out to get to our base rent. And then we have their area here to encapsulate our total CAM charges with landscaping. All the auxiliary charges that are included in your lease agreement should be recognized here. And then now as we move down, very similar to the staffing section, we just itemized out the facility and repairs and maintenance section of your P&L to what we see frequently within a detailed P&L. It's structured exactly the same, icon bubbles to kind of give you a little bit of an insight of what we're looking for within this particular box, as well as the overall inputs and benchmarks that we have for your view as well. It's pretty straightforward once we've kind of tackled the overall layout and seeing how this works with the model. But facilities is, I think I would say your number two driver overall from an expense standpoint. So we do want to break it out and make sure that we're hitting all of our segments and all of the expenses related to your facilities and repairs and maintenance costs through your P&L. Kristine, anything to add here?
Yeah, when you own your buildings, you can control that rent. So as Taylor gets into the report side of things, you can see how you can control your facility cost center percentage wise. We'll get to that, but you know, if you're renting, it's a set amount. If you own the building and you have a lease agreement between your centers and your properties, then you control that. So just be aware of that opportunity.
Yeah, that's a really, really great point. And I think it's also useful for this tool to kind of gauge what rent, if you do own your property, what rent would be appropriate for you. And we can kind of go into the reports and insights and play that what if game and kind of see how that impacts your profitability and if it makes sense for you right now to implement that strategy. That's a really great point, Christine. I'm glad that you're on these calls with me because you point out a lot of great stuff that I completely forget as walking through these little technical details. But they're
Yeah.
great insights that we need to kind of keep front of mind as we're walking through all this. Jumping into the operational expenses, same overall layout. We've broken it down by program and admin cost based on some frequently seen characteristics and items that overall, looking at a traditional childcare preschool P&L across the industry. Again, I do want to highlight as we're working further down into this area, this is what we were referring to earlier as we were walking through our revenue and the different revenue segments. And Kristine pointed out the grant section. We've included a grant input box here just to get a well-rounded and overall capture your P&L and all the revenue segments that you recognize within your financials, so that all of that detail is inputted into the model and can be taken into consideration for your benchmark analysis. We've also included some other expense line items that are not necessarily cash expenses, but are recognized from a financial perspective and do impact your profitability from a financial piece. So we want to make sure that we highlight those here if this is attributed to your operations from franchise piece or interest, depreciation, amortization. Please recognize those here. I hate to really breeze over this, but the functionality is very similar. It's to the facilities and staff section, but this is a very important piece. Again, this contributes to another, I would say 20 to 10% of your overall expense structure. So please give this the detail it needs. And I always encourage people as they're walking through this this segment in particular, don't get caught up on the name or the line item particular. If you don't have something that corresponds one-to-one, say you don't have a dues and subscription line item, but you have things that are similar that can go into that bucket. Let's make sure that we're putting them in that corresponding bucket and being consistent as we're walking through and updating the model. But don't get too caught up on making sure your line items match exactly what these line items look for. But let's make note and keep tabs and keep record of where you're putting each line item from your P&L to the framework app. Kristine has a great resource and offers an awesome service that actually aligns your QuickBooks and your financial systems P&L chart of accounts to what we utilize and what we recognize within the framework app. And I'm sure that provides just a load of great opportunity for all of our users from expense management and using the tool as well.
Taylor, I do want to emphasize expense management. We look at tuition and capacity and enrollment. We look at discounts and we look at staff costs, but we have to pay attention to our spending habits. And so a lot of profit is buried in program costs and advertising. Maybe we could spend more in that area, but the program supplies, the food costs, they get out of hand sometimes, the dues, subscriptions. So we really want to hone in on where we can free up profit in this area as well.
That's exactly right. Now, jumping in to one of my favorite aspects of the tool, and really where Kristine and I can sink our teeth into what this tool has to offer and really start to see the benefits of using something like Framework and taking it back to your management and operations of your company, are the reports and insights. So right after we input all of that financial data, we land on a page that looks just like this. And this is our benchmark analysis tool. You'll see that once we landed on this page, it had everything out, broken down line item by line item in a detailed format that's very long. What I like to do is start at a 100,000 foot level and slowly break it down from there looking at it benchmark by benchmark. So on the far left-hand side, we have the benchmark analysis based on your tuition and occupancy, and how that jives with our benchmarks for expense management. And what we typically like to see based on your, again, your tuition size and your enrollment, what your expenses should look like and overall profitability should be. So looking at each line item here, we can see that we like to keep our overall staff costs around that 50% level. I would like to see it come down just a little bit more, but overall, based on the inputs that we have, we're sitting at 40%. We're looking at really good expense management from a staffing perspective. We're doing pretty good in that regard. We're probably a little bit of area of opportunity here, which the model will probably point out, but overall, comparing benchmark to benchmark, we're doing great. We're almost 9% below the overall average for our size and capacity. Looking at facilities costs, we're also doing really good. Facilities costs, we do like to see in that 20% range. The large majority of that facilities cost is going to be your rent. We typically see rents in the neighborhood of 10 to 12% of your overall revenue. Now, it also depends on if you are in a new build or an older facility, or if you're in a newer market, an up and coming market, a well-developed market, or if you're close or further back in a middle market tier. There are a lot of influences and variables that go into that number, but we like to see it in that range of 10 to 12%. So having the remainder of that, the 10% to encompass the whole 24% is right around where we want to see. 10% in rent, 10 to 12% in other maintenance costs. And you can see here that we're doing great. We're probably recognizing about 5% in overall maintenance costs. We're crushing it. And then moving down to program, admin, you can do the exact same expense comparison there and where we're landing on overall profitability. So based on this analysis, we're doing pretty good from an overall profitability standpoint. 30+% is doggone incredible in some markets and a great achievement for a lot. But you can see that we have a lot of area of opportunity here. We're almost giving 10% away in discounts. And we'll see that being pointed out. And the model has a great way of shouting at you in some really high focus areas as we move along. But before we get into a little bit more of the segmentation of what each report says, we can look into each area of our P&L and dive into, okay, if we were missing our staff cost benchmark, and we were closer to the 60-65% range, we can drill down into these metrics and identify where are we spending that money and start to understand, is it truly all in salaries, or are we spending too much in staff training, which might lead to a turnover issue? Are we spending a lot of money there training employees just for them to walk out the door? And that can give us insight into other areas of our operation and management that we can look into and invest some time and resources. So this is just a great breakdown to take a peek at as we're walking through the reports and insights. And just gives you a lot of information right off the bat from your P&L inputs. Kristine, do you want to jump into more of the reports, or do you have something to add?
Yeah, and I'm excited about the what if game. So I'll go quick. The important thing here is that there are goals set for each cost center. You want to align your financials, your chart of accounts, your P&L per se, with it, so it's easy to put the information in. But what I want to point out is if you own the buildings and you're controlling your facility costs and reasonable rents with your agreements, you might be a little lower on your facility costs, giving you a little more wiggle room on your staff costs. We are seeing staff costs as high as 60, 70 on up. I mean, it's insane, right? What we got to do is increase tuition, reduce those discounts, and pay attention to enrollment at the same time to align those staff costs with what it's really going to be, what we need to pay for it. And so at the end of the day, looking at all of those 4 centers and the 5 pillars, are we hitting 15+% net profit. Okay, so goals, we're setting goals. Maybe you're not there yet and you want to reduce a little bit at a time till you get and hit that goal. If you do, you're going to be a profitable childcare center and business owner.
Yeah, and that's the last, before we move on, I want to punch that 15% number. It's such a pivotal number. Over all of the financial data that we've received and doing our evaluations and analysis over P&Ls within the industry, we've constantly seen that 15% is almost like a magic number where you can start to see that profitability reinvested back into the company, but it opens up so many other avenues of growth by hitting that profitability because of the time and effort that you've taken to get your other cost structures in line so that you can hit that number. So great call out for 15% and overall profitability there. For the other reports and insights before we dive into, we've split them out to correspond with the input sections and segmentation that we have initially. So you can dive into the different areas to see what opportunities and play some what if games with that section. For overall encompassing and for the interest of time, I want to show they all function about the same. So let's hit staff costs. So if we walk into the staff cost section of the reports and insights, it gives you off the bat loads of information and where to look and some great ideas to implement within your strategy and cost structures. So the model will go ahead and highlight where we're hitting here. On a 40%, it's almost always going to say salary cost is going to be an area of focus, almost no matter where you land on the benchmark, just because it's one of the easiest ones to, you give it a little, you neglect it just a little bit, it can turn into a big hairy monster very, very fast. And all of a sudden you're up to 70% of your staff costs and it's a little out of control and it's taking up an enormous amount of your profitability. So the model reflects that and wants to draw attention to that. So red means we want the attention. We want to be constantly considering what my staff cost looks like in light of all of our management strategies and things that we implement. It also gives some best practices here, along with those direct reporting or direct links to the content that we've built over the last couple of years, from blog posts to YouTube videos and other webinars. So a great one-stop shop for you to get all the content and resources that Hinge provides regarding staff costs. The best feature that I love to look at is the what if games. And this is really where you can toggle and leverage the tool to start to see, okay, if I increase my staff cost here, how does that flesh out for the rest of my expenses? But what, more importantly, what do I need to increase my staff expenses to hit that threshold, to be at a manageable level, to continue to be competitive, but also profitable within my market? So we can see here with a great visual of the pie chart of your overall revenue, we can see that currently 43% of staff costs is my overall revenue. But to the question that Kristine had earlier, as far as I understand that I'm going to have a tuition rate increase here soon of 10%, right? What does that look like if I'm able to keep my staff costs at the current level? It goes down to 39%. That means we just recognize 400 additional percentage points to the bottom line in profit. That flows straight to the bottom line. And that's where it can be very impactful in understanding, and we can quantify the impact to your profitability right off the bat. Now, understanding that if we increase our tuition by 10%, we more than likely are increasing our tuition because we have to adjust our staff costs in that same direction to be competitive within the market. So if we also have to increase our staff costs 10%, 8%, we can still see that we're recognizing a little bit of profitability there and leaving room for some other expense structures to flex as we're increasing our tuition, as we're increasing our salary cost. So we're building in a little bit of cushion there from the 44, 43%, now to 42%, and we can play with that little extra couple $1,000s there in other areas. I know Kristine loves this aspect of the tool, and it informs so much of what she shows within her area of expertise and in her coaching. What are some areas and some insights that you found using this tool, Kristine?
Well, we're looking at forecasting now. So we're looking ahead instead of just behind, right? So you were spot on. Like, take the history, now come in here and show the what if. That's the looking into the future. And so we know with the changes that are coming that we're going to raise staff costs by so much. What does the tuition need to be to stay in that 50, 55? We go about 50 to 55 depending on the rest of the cost center. So if we can hit that, we're in good shape on this side of our business, and do that for each of the different areas of your business. And then that all comes together to make you a healthy and profitable, owner.
Yep. And I think another section that illustrates this perfectly is the discounting portion that I want to hit on. I know we're running a little short on time, but I really want to show the discounting portion because it really is that hidden piece of it can suck up so much of your profitability, but the tool utilizes visuals and those what if forecasting so well to show you where your full capacity is, where you currently are, and what you could optimally be if you address a lot of your discounts. So very similar layout, all the same things. We have a lot of information and content pouring into this exact segment for discounting, and all of that is available to you here. But jumping into the what if forecasting, this is a great tool because it allows you a lot of flexibility. So looking off to the right hand side, we see if we were at full capacity, broken down by classroom, what is our top level of tuition that we could realize? If all of our classrooms were full based on our current tuition rates, we would be sitting at almost a $1.3 million generation. Now, before discounts, where we currently are sitting is about a $1 million threshold. The cost of we're giving away over $100,000 in discounts. This is what the model is telling us right now. So with this information, we're able to play around with this toggle and say, okay, I want to recognize as much I can in revenues, but I want to be sensitive to the fact that I can't just strip out all of my discounts, but I also can't just jump my tuition rates by 10%. How can I play with that to realize some profitability there? And the tool allows you to do this. So if we weren't going to jump all the way to 10% and almost get to, a $1.2 million generation or a $1 million generation after our discounts, what if we slided that a little bit and we were able to get to let's say an 8% discount, but we cut our discounts back by 10%. You can see that we saved a little bit there. What if we discounted that even more? What if we cut our discounts back by 10%? We're realizing a little bit more of a net impact in that regard. Additionally, we have more options for you to play around with this revenue in eliminating different segments of your discounts and also of removing those discounts from different classrooms. So say that industry discount wasn't working out, let's remove it altogether. But additionally, we want to recognize as much profitability in our infants and toddlers. So let's eliminate that discount and provide discounts for our older children as well. How did that come out? We jumped another 2% in eliminating that discount. So instead of discounting or giving away almost $100,000 in discounts, we've cut that in half, essentially. So you can start to see how this fleshes out from your overall revenue picture just by utilizing this tool alone. And the flexibility that it offers with the visual pieces, I think, is a great tool for you to just do some forecasting on your own. But again, to Kristine's point, she utilizes this exact revenue analytics moving forward in that forecasting and budgeting and through her financial journey.
Awesome. You guys just gotta remember to look at all sides, and discounts is a huge area for hidden profit. So you may not be able to fix it all in one day, but you can start working towards it as you just have a plan for it and bring on new families. The grandfathered families, a little bit at a time, but you definitely have to look at it.
That's right. And just to kind of conclude our framework walkthrough here, it gives you great insight for just a summary view of where the high points are, some helpful tips just right off of the bat, where you need to be focusing your time. Again, we're very excited to be giving framework the attention that I think it's always deserved, but now putting some resources, putting some of our team members behind it, and getting the buy-in, and ultimately realizing all of the effects for your financial growth and sustainability that it can provide for you as an owner and as an operator. So jumping back into our presentation here, just to wrap up in the last couple minutes here. So recommended best practices, we've touched on a lot of this. We want to get you ultimately to the green. The green zone is the best zone to be in. It means that you're hitting those profitability markers and benchmark overall other industry averages, and that you're doing a great job. But ultimately, what we really want to see is that you're updating these financials within framework to see the incremental progress as you're implementing these strategies. We want to see that progress within framework. And if you keep it in a centralized place where you're regularly updating, regularly doing this analytics and analysis, using these what-if games and tools, you will start to see the slow step-by-step process of building that foundation so that you can realize some great financial gains here. And another thing that we also very strongly encourage is getting your team involved. If you're a multi-site, we allow an option for you to have an umbrella over different accounts so that you can have a director and yourself meet, walk through framework all at the same time, and get their buy-in as well to play those what-if games and show them if they are able to capture some savings and manage their expense structure, what that can mean to the bottom line and overall health of their center. So getting that buy-in, getting your team involved is something that we absolutely encourage. It creates a level of accountability and buy-in that kind of brings everybody together to a common goal of sustainable growth. Now, the question is, what's the step going forward? Now that you've inputted all of your information, you see the value of framework, what's the next steps? And that's where I always encourage people to seek out Kristine's expertise and her awesome framework journey or financial journey that she puts all of her clients on, and framework and financial operators and leaders within this space. And the results she's seen so far and the steps that she's seen so far are without a doubt and undisputed. So Kristine, you have anything to touch on, or you want to leave us off with this?
No, I'm always excited to help any business owner that reaches out. The QuickBooks class would help you align your chart of accounts. Will teach you how to manage that, align it with framework. Also to look at grants tracking and different locations under the same EIN or umbrella, and you're using one QuickBooks file for that. We have all the strategies, all the custom reports, and we dig pretty deep. On the journey, it's taking you from your QuickBooks cleanup to, all the way through a deeper dive into all of those pillars, the 5 pillars that we just went over within framework. And we just go way deep into it. And everything is based on your dreams and goals, where you are now and where you want to end up in 1, 3, 5, 10 years from now. So we're excited to have you guys reach out and just chat with us.
Absolutely. And all those resources and the best way you can reach out to all of our financial success services team members are through this link that we have here, our Hinge Advisors webpage, /financial-coaching. You can see all of our team members as well as all the services that we provide for our success services. I think we've tackled some of the questions as we've gone along, but again, we really appreciate everybody that's in attendance and walking through framework with us today. Again, we are beyond excited to be providing this level of content and this level of analytics for our clients and for our fellow Hingers that have been with us for so long. And we look forward to implementing this into your success strategy and getting all of our team members rallied around you and your success, and the sustainability for your company. So please, if you have any questions as you're walking through Framework, if you want to know how to get into Framework and just what are the next steps and what does this overall look like for you in your unique situation, please feel free to reach out to Kristine, myself, or anybody on the Hinge team, and we'll get you plugged in and set up for success. So I want to say thank you again for coming along with us today. And we hope that you brought just one little nugget out of this webinar, and we look forward to getting in touch soon. So thank you again and have a great day.
Thank you, Taylor.